Hello friends, it's a pleasure to meet you again. In this video, what we are going to discuss is the amendments that are applicable for May 22 or November 22 examination. May 22 or November 22 examination in case of intermediate students. In case of intermediate students, what are the applicable amendments? The first one is under section 32. What is the amendment that we have got under section 32? The amendment goes like this. Section 32 is for calculating the depreciation. If it is an intangible asset, then the depreciation would be available at the rate of 25% for the intangible asset. Now, there were always doubts on whether the depreciation would be available for goodwill or not. There were case laws supporting the assessee stating that the depreciation would be available for goodwill. Now this has been amended and they have now brought and they said that depreciation on goodwill will not be applicable, For all the other intangibles, it will continue. Patent, copyright, any other similar business or commercial rights, it will continue. But you will not be eligible to claim depreciation on goodwill. Not be eligible to claim depreciation on goodwill. The next amendment we have got is in the section 36. Section 36 is other deductions. There are plethora of deductions that we have got under section 36. But what is the amendment? We are going to touch upon only the amendment that we have got. The employer contribution to the provident fund or other funds are covered here. Employees contribution to the provident fund or the other fund like ESI provident fund are covered here. For the employees contribution, the due date is the due date given in the respective act. The due date given in the respective act. That means if it is PF, then it is 15th of the next month. For April, it has to be 15th of May. For May, it will be 15th of June. And for June, it goes on 15th of July and it goes on. For the employer contribution, the due date is under section 43B. What is 43B? That is, you should have paid before the due date of filing the return of income. You should have paid before the due date of filing the return of income. There was always doubt whether the due date given in 43B, is it applicable to employees' contribution also? You have got few judgments stating that it is applicable, few judgments stating it is not applicable. Now the income tax has clarified stating that for the employees' contribution, 43B due date is not applicable. That means you have to ensure that the employee's contribution is paid before the due date given under the respective act. If it is not paid, then the deduction will not be allowed. You will not have a deduction for the employee's contribution. This is the amendment that we have got in relation to employees' contribution under section 6. Then 44AB amendment. What is 44AB? It is the tax audit that is the. It is the tax audit that we have got. In case of business, the tax audit would be applicable if the turnover exceeds 1 crore for a business. If it exceeds 1 crore, tax audit would be applicable. For a profession, if it exceeds 50 lakhs, the tax audit would be applicable. However, to discourage cash transactions, the government came back and told that if the turnover, if the cash payment, two conditions have to be satisfied here. First condition, cash payment is less than or equal to 5% of the total payments. Cash receipt is less than or equal to 5% of the total receipts. That means you should have received by way of account pay, check, account pay, bank draft, NEFT, RTGS. Same manner, payment should also go like that. If these two conditions are satisfied, then the turnover, then tax audit would be applicable only if the turnover exceeds 10 crores. Only if the turnover exceeds 10 crores. What is the amendment? The amendment in this particular case, this was all there earlier. Cash payment is less than or equal to 5%. Cash receipt is less than or equal to 5%. It was all there earlier, existing. It was all existing. What was the amendment? The amendment is only in relation to this 10 crores. Only in relation to this 10 crores, not in relation to anything else. It is only in relation to this 10 crores. Earlier, the turnover limit was 5 crores. Now they have increased it to 10 crores. The next amendment that we have got is in the context of 44 ADA. What is 44 ADA? Presumptive income for assessee who is running a profession, specified profession. It is applicable. Earlier it said it was applicable for resident individual. Now it is applicable for a resident individual. It is now applicable for a resident individual, partnership firm. So the amendment is earlier it was applicable for all resident. Now they have brought and said it is applicable for a resident individual and partnership firm other than LLP. Resident partnership firm other than LLP. So it should be a resident individual and resident partnership firm other than LLP. This is the amendment that was brought in. All the others, they should pay at least 50% of the presumptive income, advance tax in one installment, all those things that we have got in 44 ADA continues. So this is the only amendment that we have got in 44 ADA. One important amendment that was brought in capital gains, which will now cover 3 sections. The amendment that we have got in section 2, subsection 14, the amendment that we have got in section 10, subsection 10D, and 45 subsection 1B, new section got introduced. So 3 sections we are going to discuss together. Now, what is 2 subsection 14? 2 subsection 14 defines the meaning of capital asset. Capital asset. It says capital asset will include any properties of the assessee, or it will include any shares and securities held by FIIs. This is something that was in existence. I'm not going to talk about those. Now there is one more capital asset that got introduced, and it says that one more item that we have got is any ULIP policy. ULIP is unit linked insurance policy, which is not exempt under section 10 subsection 10D. Unit linked insurance policy which is not exempt under section 10 subsection 10D is the next item that we have got. Now, in this case, what is the item that is not exempt under section 10 subsection 10D? Now, if the premium payable, 2 items that are not exempt under section 10 subsection 10D, premium payable is more than 2.5 lakhs per annum. For the ULIP policy, premium payable is more than 2.5 lakhs per annum. And this is the first item that is not exempt under section 10 subsection 10D. Because it is not exempt, it would be a capital asset. The second item that is not exempt under section 10 subsection 10D. Now I have got multiple ULIP policy. ULIP is unit linked insurance policy, where the amount of premium payable individually does not exceed 2.5 lakhs, but in aggregate it exceeds. Then that is the second item that is not exempt under section 10 subsection 10D. What is the second item? That is ULIP policy where premium payable in aggregate exceeds 2.5 lakhs per annum. In aggregate exceeds 2.5 lakhs per annum, then it will be taxable. So 10 subsection 10D tells you, in case you receive any maturity proceeds from a life insurance, it is generally exempt. There are few scenarios where it is not exempt. We are not talking about those where there are no amendments. So the amendment is, if the ULIP policy, the premium payable is in excess of 10 lakhs, and That's the first one, that is not exempt. Because it is not exempt, it will be a capital asset. Second, the ULIP policy where the aggregate of the premium exceeds 2.5 lakhs. 45(1)(b) talks about how it would be taxable. So we said 214, it says it is the capital asset. Section 10, subsection 20 says these two are not exempt. Because these two are not exempt, it will be a capital asset. 45 subsection B is the computation mechanism. It says any profits that you get from these two ULIP policies, will be taxable as capital gains. Any profit that you get from these two will be taxable as capital gains. When it would be taxable? It would be taxable in the year in which the amount is received. In the year which the amount is received. Which two ULIP policy? Where the premium payable during the year exceeds 2.5 lakhs, or the aggregate of the premium in respect of more than one ULIP exceeds 2.5 lakhs, then it would be taxable under section 45, subsection 1B. To break the videos into small parts so that the viewing will be easy. In this video, we'll stop here. But however, there are few more amendments that we have got in TDS in chapter 6 deductions. So when we meet up again, we will discuss those amendments. Thank you.